Welcome back to the tip of the week. We're going to go over this week's tip, and that is knowing when to move away from the computer and from the markets. This is a really simple and overlooked tip, but it's actually going to save you a lot of money, but it's knowing when to actually step away from the markets and some of the human biases that actually come along with it. That's also going to cost you more money and more losses to your overall portfolio balance because you're not understanding what's actually going on. So we're going to dive right in, and you're going to be able to see the screen at this point. What we're basically going to be trying to look for is we're going to be looking for price action, right? And we're going to be looking for different types of scenarios in that price action that give the same sort of outcome. We're going to show you how, one, the right outcome can be achieved by taking a step away and actually still being fresh and not being mentally fatigued, and two, the outcome that this human bias plays into and sort of squeezes things to make it fit to your bias to get the job done quicker to avoid that pain. So if we dive into just any pair, right now we're actually on gold, so let's see if we could find something on gold as it stands right now. So basically what we are looking for, when you are staring at the charts for so long, you only get so much mental energy to actually do your analysis. So that's why it's best practice to do it on Sunday and then minimally throughout the week go through the charts and preferably lists of trades that are ready to enter, lists of a watch list that you've got for this full week, ones for the next week and future trades, something like that. But basically the more you stare at the chart, the more fatigued you get, and when you get to that fatigue stage and you're trying to break down a pair, typically what will happen is the brain will choose the easiest route possible because it's under a little bit of pain. It's a safety mechanism. So when you're staring at the charts and you do feel that little bit of mental fatigue coming on, make sure that you do step away. So for example, if we just take this bit of price action here, we're going to be looking for anything very quickly that's going to build up a few confluences, because that's ultimately what we're looking for. We're looking for a few confluences to tell us, okay, trade A is actually going to be producing a good outcome, it's going to give us a good risk to reward, and it's actually going to progress towards our target. So we're looking for those few confluences to get that tipping point, because everybody has their tipping point where they say, yes, I'm going to dive into this buy or this sell. So we're looking for that tipping point, and we're looking for it fast. So we're going to squeeze things to make it fit, and maybe even just use confluences that aren't really confluences. We might just be drawing lines for the sake of it, drawing really quick, fast support and resistance zones without actually really mapping them out and going through. As you can see here, like say for example, if we just take this bit of price action here and we have this here, we don't know what's actually going to be happening here, but preempting this, we might, if we are in that state of being fatigued, we might actually just try and get this over and done with as soon as possible. And we can see that we've had a little touch at the top of this channel here, and then we can see that we have a nice level here. This is actually a not bad setup, if I'm being honest, but if this is the first thing that we're looking at without actually breaking down, what is the actual overall weekly and monthly structure, what is then the 4-hour structure, what is then the 1-hour structure, where can we see price action actually moving to, are we able to get a good risk to reward? And 9 times out of 10, when you are in those states, you'll actually find that when you do come back to your analysis and then you go to make that trade, you're making trade of false information, and you wonder why you didn't actually get in the right entry, you wonder why you've been stopped out, you wonder why the trade didn't go to where your take profit is, even though it wasn't an unrealistic take profit, you might have just got in the wrong leg of the trade. So it's very, very easy to look at charts and make stuff fit, because there are levels literally everywhere, all over the chart. Like I could literally get a horizontal tool, stay in draw mode and just say, okay, we're in yellow, let's turn that to red. And I could easily just say that all these are levels, and you could actually see that they could actually be, that could be a level, that could be a level, that could be a level. So you can see that actually are levels, but it's finding what levels are actually the best, what ones are going to give you the best ROI, what ones are going to be more highly probable, what ones are going to be more highly probable in terms of actually making you money. So again, with that being said, and you see how easy it is for just 5 seconds to find 5 different levels, very, very easy. But it's matching these levels with correct price structure, it's matching these levels with well respected and well planned out trend lines, because you have to honour the first and the main touches. If you are constantly moving and changing and shifting the trend line, then it's putting everything out of focus, it's putting the beginning touch points out of focus, and then you're starting to rely on the back end touch points, which are obviously less reliable because they're at the end of the price action. It has less stature, it has less reliability in terms of how much data it actually carries. So very, very easy to say, very, very hard to do, but I would encourage you every single time that you do feel like this, just know that there is a human bias out there, that when we are under pressure or we are under mental strain, we are going to try and bend stuff to make it fit to our bias, and we are 9 times out of 10 going to lose money when we are making decisions in that frame of mind. Because when you're in that frame of mind, things are going fast, you're not actually able to analyse and make sure that the decisions that you're making are actually the right ones. And of course, when you come back around to it, 9 times out of 10, you rethink your analysis. That is if you're lucky enough to actually feel fresh, come back to it, and then decide to do the proper analysis that you should have done for the very start. So not only are you saving time, you're actually saving money, and you're also saving yourself having to be in trades, managing the trades, and going through the actual stress of having a losing trade that you didn't actually need to be in. So I would just quickly go in one more quick example. Let's see if we could try and find one that we could have probably tried to make stuff just fit. Let's see. If we draw this down here, cater to relevant touch points. Now, if that was me being lazy right now, I could just say that's me done, and we could expect price action to actually start coming back into this level. But if you actually see what's going on here, if you look at this little area of price action right now, you'd actually see there's something a lot more complex going on. But if you're fatigued right now, or if you're hungry and your tea's ready, or it's just about to be ready in 5-10 minutes, you're not going to be in that mental frame of mind to really be breaking down every single piece of the price action that you're going to need to make a decision on. So right now, this is what we could have left it at, but knowing what we know, knowing to step away and come back when we're fresh, we're able to come in now feeling not fatigued in any way, and now we're going to be able to analyse and see that this is actually going to turn out to be, or could turn out to be, a little bit different compared to what we initially thought whilst we were fatigued. So if you can see here, we are actually forming quite a small descending wedge pattern, which of course is a reversal pattern, but it's forming it going into that zone which we initially thought that the price action was going to just slowly drift into. But if you actually look to the left, and if we go back to the daily, you'll be able to see here what's actually being formed, or on the 4 hour rather, what was actually being formed on the 4 hour could potentially be a hammer candle or a dragonfly candle. Dragonfly candles when the sellers have been pushed to the bottom of the market and the buyers have pushed them all the way back up, closing near the open but on the top third of the full day's range, or the full candles range, whether it be the 4 hour, the 1 hour, 15 minute, 5 minute. But because it's on the 4 hour, it's actually quite a substantial enough amount of data to actually make a good decision of if we get that close in about 10 minutes, with price actually just being a little bit higher or being sort of bang on the open and the close. So that is suggesting that sellers are starting to lose a little bit of control. The price action is getting a little bit squeezed. We're starting to see that push back on the 4 hour from the buyers. And now if you look left here, you could actually see not only is there a level here, but right where the price action currently is right now, do we still have a level in here? It turns out we do still have a level in here. We've got good resistance here, resistance, 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 resistance. So this is actually another key level that we need to be aware of. So will we come down to somewhere all the way down into this region? We might not. We might just turn and go back up to 9 times out of 10 the top of where the pattern started. So it would be a small execution, something like this, back to the top for quite a small trade, but nonetheless it gives you a good understanding of just how different, or just how much you could have missed out on a big move because of being a little bit impatient or a little bit fatigued. If you're able to notice little tiny gaps in the market just like this, these can sometimes be the difference between making a lot of money and just a little bit of money, as those little extra attention to detail, being able to really understand the price action, being able to really find levels, because everybody can find levels. It's finding the best levels and making sure that it's relevant not only to the price action previously, but most importantly to the price action now. And if you could do that and you're able to time that perfectly with your entries and getting good risk to reward every single time, you're going to make a lot of money in trading. So with that being said, I hope you've enjoyed this video. This is a tip that, again, is very overlooked, but will make you a lot of money if you're able to discipline yourself to carry it out every single day and master it. So until the next tip of the week, we will see you in the next one.